Hello, today we are going to talk about the new SEC report and how they can potentially suspend trading for over 10 trading days. We'll talk about how many shares we think are direct registered, how many shares we think are in the float actually being like left to manipulate, and then potentially how we got a number where they could be short over 1 billion shares. Justin, let's go straight into the SEC report.
Absolutely. So we mentioned this in the last video right here. Gensler, the current chair of the SEC.
Wait, restart that.
Gosh, right, Josh. Gary Gensler, the current chair of the SEC, he put this tweet out last Friday, the 28th, and basically he asked, the federal securities law generally allow the SEC to suspend trading of any stock for up to blank business days. The answer is 10. And when I saw that, I kind of think that there might be a little bit more to be read between the lines. So I did some poking around on the SEC's website, and I came across this, and this is why the SEC would suspend trading of a stock. And basically they're making the argument that they're going to do it for the public interest, for whatever that's worth. Anyways, they note 3 examples from this. The first one would be a lack of current, accurate, or adequate information about the company. Now, this is done from the standpoint of, the company's being shady with their finances, or they're not materially disclosing risk or revenue or whatever, expenses. But I guess you could make the argument that this also might imply that the company is acting in good faith, but there's a lack of adequate information as provided from the various mechanisms, the plumbing systems of the market, which is, of course, a big part of the GME thesis. This takes us into the second point, questions about the accuracy of publicly available information. Again, the SEC writes this from the standpoint of the company has been acting in bad faith, putting out erroneous information, to pump and dump their stock, whatever. But you could also make the argument the same would apply about the inability for the public to get correct information. For example, what's the true short interest on a company? What's the true percent of insider owners who own whatever percent of the stock, and so on and so forth. So that's it. And the final thing was questions about trading in the stock, and I think that the last part specifically addresses the settlement systems, which again is just a fancy way of saying, the plumbing of the system, which is the ability to clear and settle transactions in the stock. And again, if you've been around, the GME thesis for some time, that's pretty much what the core revolves around. Anyways, 10 days is kind of the max. That is 10 business days, so about 2 weeks in order to protect investors from those horrible people. I would just kind of remark wryly that, listen, SEC, if you're really there to protect us, retail investors, to put it bluntly, where the fuck have you been for the past 30 years? Oh, I know where you've been for the past 30 years. You've been in bed with the very companies you're supposed to regulate, with a revolving glass door of walking into speaking fees, high-paid jobs where you do nothing, and board nominations.
Okay, well, besides your hatred of the SEC, well, let's think of some actual questions, because, well, you might be thinking, what happens if you have options that are expiring? And what happens if during these 10 days and the stock is suspended? What happens if you have options that are expiring and they're in the money? What happens if you try and exercise them? Justin?
Oh, yeah, so pretty much good thing. Good question. So before we started the video, I just typed a little email off to the SEC. I don't know if they're answered or not. If they do, I'll be happy to report back. And I basically asked these questions. For example, let's say that something were to happen, and I'm just pulling dates out of my backside here, just as an example. GME shoots up to 1,000 on, let's say, Wednesday or whatever, pre-market. Just it's something that's really, really weird. The SEC comes out and says, listen, we're suspending trading on GME for up to 10 business days. So the point is from Wednesday, I think it's February 2nd to the 16th or whatever, right? You basically can't trade GME. But when they suspend trading of GME, let's say the last tick was, again, just to make my math simple, let's say it was $1,000. Well, now you're in a really interesting thing, because if that happens on Wednesday, well, what about options that expire on Friday? Because if you can't trade, that is, you can't buy or sell GME, well, can you execute options? Because at $1,000, theoretically, that would drag the entire option chain into the money. So in other words, that is a call option. Anyone who's sitting on a call option would, again, in theory, be able to exercise the call option if they so chose to do so. And if the exercise of an option isn't necessarily the trade of stock, rather it's just the assignment. It's like you're not trading, as I understand it, anything with an option. It's just no. It just I prepaid, or I've prepaid for the right to buy this, so I'm going to give this, and you're going to give me that. You're just finishing it up. What happens in that case? If the SEC says, okay, well, listen, we're going to stop options trading, so you cannot open new positions, you cannot close new positions, or you cannot close existing positions, and you cannot assign contracts, you cannot execute an option. Okay, well, I can see that happening. But then what about the 2 Fridays? Because you're going to have options that Friday that will expire, and then the week after that are theoretically going to expire.
What happens to the options when the trade is suspended?
Yeah.
That's what we don't know, and that we need the answer to. So I'm also going to send an email to the SEC, and I encourage anyone, if you want the answer, to ask them as well. If anyone has an answer to this question, we'd love to hear it. Going on to the next piece of news.
So just one other thing before we go on to the last thing, and let's just say also that the SEC says, hey, listen, options on our bag, whatever, right? Okay, well then let's say you want to get control, let's say you want to buy more GME. What's to stop you just from buying option contracts with the sole intention of taking delivery? It's like, okay, well I can't buy stock, the normal way, but I can just buy an option and just buy it in 100, chunk things. What about the option market makers? And let's just assume the option market makers have acted in good faith. They've tried. Let's just assume they've tried to hedge themselves appropriately. Well, now all of a sudden, these guys, the option market makers, what are they supposed to do? Because they're like, hey, listen, we're being called. We have to honor our end of the bargain, and we cannot go into the market and do what we are supposed to do as good stewards and as responsible market makers to manage our risk. So, the point is that options are going to be this huge cluster with us, and I don't know what the answer is, because there's no easy way. Doing nothing is an action in of itself, particularly when it comes to options that are going to time out. Because from Fidelity's perspective, I think this is true of everywhere. If an option is just 1 cent in the money, it executes. Do not pass go, do not collect 2. It just executes. I got margin called to my dumb self last year because I had a Pfizer call that was expired in the money. Yeah, that was not a good day for me. But
On to the next thing. Let's just go over the math on GME. So there's 75 million shares, and 55% is held by institutions or insiders. So that brings us down to about 33.7 million shares left. But we all know that people are starting to direct register. If we go straight to the SEC filing, if we go straight to the filing report from GME, then about 5 million shares were direct registered October 1st. We know that it has really picked up since then, and now let's just say there's 6 million. Let's say an extra 1 million shares have been direct registered since then. That brings us down to 27.7 million shares left. Okay, well, let's say there's about 100,000 people out there who on average have 10 calls each. Then if everyone exercises those calls, that would be of 10 million shares, which leaves 17 million shares left. If there's 17 million shares left and they're short? We did a video where we just pulled every single transaction from all GME, and they were short since 2019 over 440 million. You can watch that video if you'd like, but we're actually seeing some more data. And Justin, let's go right into that. On just pulling some shit out of our ass, Interactive Brokers came out today, and they came out and showed that they are short. GME is the highest out of any stock that they have. And how many shorts does that lead up to, Justin?
Right. So just as a quick note, there's a lot of guesswork that's being done here, and we did not do this, but someone else did it, and I thought it was a very interesting take where they took the size of the box as a stand-in, or as an accurate stand as they could be, to actually get the dollar amount.
But we also don't know if this is accurate. This could be completely photoshopped. Everything, we don't know what there is, and we are trying to just take all data pieces that we see and put them together.
Right. So the way it works is, let's just assume all the data came from today, and so assume this with great suspicion. But the point is that if you can use the proportions of the boxes that were put out there, then you can kind of say, well, if GME closed at 108-ish, give or take, that implies that there's about 17.3 million shares and change that are just short an IBKR, or about a 0.5% of the assets under management, or the value of assets under management, if you consider the value, or the market cap of the GME position, not the shares themselves. So then if you say grow that out, and Josh, I think you're the one that was telling me that if you look at the assets under management of the top 5 brokers, that's what, 21.7 trillion?
Correct.
A big number. It's a big number. So the point is, this is a fun little mental exercise.
So, so basically what this is showing is Well, Interactive Brokers, if they're short 20 million shares, which that data showed us that they are, we don't know if that data is correct, but just for the sake of this, we are showing Interactive Brokers is out of their $373 billion of assets under management, 0.5% of that is short GME, or $1.7 billion, or 17 million shares. If we just do that exact same math, so 0.5% of GME is being shorted by these firms, and then we just say, okay, let's just take the top 5 firms, which were Fidelity, Charles Schwab, TD Ameritrade, E-Trade, and Merrill Edge. That gives you about 21.7 trillion dollars, which would give you, Justin. Let's I mean, you have to take this with extreme skepticism, but this is what we're actually getting. I mean, they basically, the number that we got was they were short over 1 billion shares just by taking this one metric.
Yeah, like, and that's just, I mean, well, maybe they are. I mean, I guess technically anything's possible. I mean, you buy a lottery ticket. Well, I'm not saying you're not going to win the lottery, just you're probably not going to win the lottery. So my take on this is that, once again, you see this. You see the same pattern that keeps coming up, where whenever there's an issue around a stock, it's always the same problem children, if not just, GME. And I just kind of keep scratching my head and say, like, I don't know how long they can keep kicking this can down the road. But again, I do note that with Gensler, the tweet we mentioned earlier, I think that is very, very sus that went on. And I would also suspect, too, that the SEC must understand that if they go through and if they take and I believe this is not, excuse me, if the SEC comes out and suspends a stock, I mean, GME's market cap, I think, is about 8.7, or let's just call it 8 billion and change, okay? So it's traded on the NYSE, and if they come out and do a 10-day suspension on GME, that is going to trigger everyone to look at GME. It's also going to bring into what we talked about before with the options, blowing up. I mean, because there's another issue going on that front. And I don't know how this is going to play out, but the way I think about it is that if someone is short, regardless of how they're short, whatever fancy schmancy mechanisms are used, sooner or later the position is going to have to be closed, or the transaction is going to have to be unwound, whatever, right? The point is it has to be done. So this is going to create a massive demand on the available, like, real shares that exist. At the same time, if you have the option chains, you have a bunch of people buying options on that front. And what's more, if these are the same, sorry, Josh?
Like, with the intent to exercise, like, these people are actually buying options, saying, I want the fucking shares, give me them.
Yeah, exactly. Because you can say, like, well, look, if retail buying options during the sneeze last year, what was it, like January 28th of 21, if retail had, instead of cash settling their options, had actually demanded delivery of the underlying, we might have seen a very different, trajectory. But the point is that if retail has bought more options this time around than last time around, the float is also smaller in terms of what's been going on with direct registration, where retail's been pulling shares out to hold in their own name. And if retail does not, I don't want to say repeat their past mistake, but if retail is
usually just everything is cash settled, and these option guys, they are prepared. They say, okay, well, usually, I mean, every single stock that's traded, maybe 0.5% of them are exercised. We don't have to actually worry about this. And in their algorithms, all that makes sense because they just plug it in. Yeah. But what happens if, say, 10% of people actually exercise? The option guys are done. And then they have unlimited hedging that the algorithm just instantly just has to fill. So this is the real dilemma that they're in. It's just like LTCM. The math, it looks perfect, but you don't take an account for something that just usually should never happen. And it shouldn't happen, but it might. And
yeah, the way, I mean, like, going back, I'm glad you brought up LTCM, Josh, because, like, I mean, these John Merriweather and his crew, like, they were by no means fools. No, by no means fools. But the problem was they just never had they assumed that everyone else in the market would not be, for lack of a better word, like utter idiots. And when I say utter idiots, the assumption that they screwed up in was that they assumed that Russia would, they assumed no sovereign would ever default on their own internal bonds, or Russia defaulting on their own internal bonds started a chain of events which basically caused LTCM's margins to blow up. And as Rickards notes, when Wall Street bailed out LTCM, they didn't bail out LTCM, they bailed out themselves. I will make the same comment for the DFMUs this time around. When the DFMUs, the DTC, OCC, NSCC, whatever CC, step up to the plate, to bail out GME holders or whatever, right? They're not doing it out of, a sense of right or wrong or trying to do right by GME holders. They're trying to do it to save their own skin.
If they say, okay, we're going to let everything go bust, all these clearing corporations have accounts with the Fed, so that is not something you actually have to worry about. You like,
Yeah.
let's say they're like all these clear corps have 500 billion total, but GME goes above that and just breaks them all. They have a direct account with the Fed where the Fed can just inject liquidity. And we talked to Joseph Wang, who actually worked for the Fed. He said there's almost a 100% probability that they will bail them out without question because it is a matter of public interest.
Yeah, and what's more, basically, the Fed can use can use whatever DFMU, designated financial or market utility or whatever, right? So essentially, launder bank reserves onto the balance sheets of you and I, people who have who have accounts with commercial banks in the real economy. That's a separate video for all that jazz. And I'm trying to think. I think that's pretty much it.
Yeah. Yeah, that is everything that we have today. This is all just speculated data. We none of this data is 100% accurate, and don't take it as such. We are just pulling as many data pools as we find together, and this is what we are getting.
Yeah.
Yeah. So I would take everything that we say very, very cautiously, and just maybe do your own research. Find out if we are wrong. Please just show us where we're wrong. If you have some data points that prove otherwise, we just want to put all the data pieces together, and this is what we are doing. All right, guys. Thank you very much. If you do think this is worthy, and if you stayed to the end, please just share the video. All we want with these videos is to educate and show people what is potentially happening, because that is, at the end of the day, how we will all expose the truth. Thank you, guys. We will see you.
And Josh, one thing too, just to add this in closing, and even if you don't care about GME, if this is being done with the GME, it's being done with others. This is in everyone's best interest to get to the bottom of this rot.
Yes. So. All right, guys.